morning, good morning. How you guys doing today? Welcome, welcome. It's a Friday. Beautiful Friday. Weather's not so great over here. Dark clouds, no sun, but a little bit of relief from the heat wave that we got hit with this week. Above 30 degrees weather. Very, very hot, very humid. So, perfect day to take a look at the pound US dollar. Wanted to do a deep dive on the pound US dollar. As you are probably aware, there's discrepancies between how pound US dollar and the euro are trading and how they're moving. So I want to address that so that you have a better understanding of why they are doing what they're doing. So if you look at my screen, you'll see that I have a chart of the pound US dollar, the monthly chart of the pound US dollar, and you can see the journey that it's taken since 2010's big strong move up. Now we've gone down, and if you take a look, you'll see that we've made new lows. Back in 2022, price made new lows, and right down here, right into an institutional area of buying. And so ever since then, there's been some buying taking place right from down here in the lows. It came up, hit some supply, and it's just been coasting sideways ever since. Okay, but it was a very aggressive, strong move from those lows there. That was back in 2022. All right, so when we look and we examine the CFTC data, we can see that recently there was an aggressive accumulation of long positions, and it brought longs all the way to 123,000. Okay, 123,000, and this is marked out here. Okay, there's a couple spots I want to point your attention to. Big aggressive accumulation. So they had shorts, then they offloaded their shorts, and they start to accumulate massive long, reaching maximum size right here. They reached maximum size on those long positions, a total of 135,000. Okay, that's they've never reached size that big before, and it goes back further here. I don't have it on this chart, but I have it in my spreadsheet. But they reached 135 max. And then what had to happen? They had to take profits on those positions, because once the institutions are maxed out on their positions, what are they going to do? They're not going to keep on adding. You know, when you've maxed out your position, you can't keep on adding because you don't have anything to add. I mean, the banks, sure, you think they have unlimited money and so forth, but according to the CFTC data, there's a maximum that they tend to reach. Okay, there's a threshold that they tend to reach, and when they do, a predictable pattern takes place. They start taking profits. And what does it look like when they start taking profits on long positions? Well, you can see on the chart here what happens when they take profits on long positions. Okay, this is why I put these bubbles around price action, and I get asked every once in a while, what indicator is that you have that puts those bubbles? There's no indicator. I do it. Okay? Everybody always wants an indicator. What's the indicator that does all the work for me? What's the indicator? Guys, you know, how about don't be lazy and sift through the data and look at it and use your brain and and track things? I would never, ever, ever turn to an indicator to do plotting of stuff for me automatically. Why would I do that? I want to use my brains, okay? The whole purpose of plotting something on the chart is to visually see what I have in here, what I have processed in my own head. Then I put it there as a reminder of what I've already processed. If you have an indicator already doing the work for you, you're skipping the important part of processing the information in your brain. So when people come and say to me, oh, what indicator is that? I'd like to get that indicator. I'm thinking to myself, you're missing the whole point of why I'm doing this. And if you don't get that point, then you're not on the road to be successful. If you want to save time and you want indicators to do everything for you, okay, fine. You're skipping the most important portion of that process, which is actually taking a look at the data, processing it in your own mind, and then placing your visual markers. So these clouds I place on the charts because they give me a visual representation of what was taking place with those positions. Dark green clouds represent to me the fact that the banks were accumulating an aggressive position. So this was aggressive long, okay? When it's lighter colored, that means they were taking profits on those longs, right? When it's aggressive red, that means the banks were accumulating an aggressive short position. When it's light colored red, that means they were taking profits on those short positions. And so you can see this whole process going on and on and on. Okay. And it just keeps me in tune with what the big institutions are doing. So I know what cycles they're going through, because there's always certain cycles that are being processed through. This is why I mention it here. Accumulation within a bullish cycle. So what does that mean? Accumulation within a bullish cycle. Well, they're accumulating a long position while their focus has been on longs. That's basically what that means. Okay. A bullish cycle could be that they start to accumulate a long position. They reach their peak, and then they start taking profits on that long position until they get back to position sizes that they had before the accumulation of the long position. Okay. And so this would be a bullish cycle. And why do I want to know that? Well, because I want to know where, well, first of all, I want to know what cycle is taking place and where in that cycle we are. So if the banks were in the process of taking profits on long positions, would logically I want to be taking on long positions? No. So if you knew that that cycle was in play, that immediately eliminates many different types of trades to go long that you'd be looking at. Medium term, swing trades, day trades. You could immediately be removing ideas of going long from your mind, because essentially they wouldn't be high odds. Okay? When the banks are taking profits on long positions, why would you want to take on those long positions when they're getting rid of them? Okay? Within that bullish cycle. So this, to me, understanding this is essential, because if you don't understand this, number one, you're untapped from reality. You're not in line with what is really happening with that currency. And your odds of succeeding on a trade are going to be lower. So accumulation within a bullish cycle, all right? And so the reason why we have that is because if you take a look here, you can see that they have been accumulating a long position again. Last time they reached highs of 123,000 were up here. Let me just show it to you. They reached max size here. Very aggressive long positions here. And the last time was right here. Okay. So as you can see, the reaction to each time the banks reached a super aggressive long position was a profit taking, which caused a move to the downside. When they reached 123, a profit taking, which caused a move to the downside. And now they reached 110, and we are seeing pressure to the downside building again. Now, this today at 3:30, we're going to get the latest set of data coming out, and we'll either see this number larger or we're going to see it smaller. And if we see it smaller, we know why. They're taking profits on those long positions, and I think there's a very good chance of that. So June 11th, next one will be June 18, June 18. June 18's data. So if we look at the chart here, this week started off on the 17th. And when did we really see the decline? Let's switch here. 18. Well, we saw a decline starting on the 13th, rallied back up on the 18, 19. So they posted data on the 17, 18. It was in the process of rallying up before the drop. So we may not see these numbers lower on the data. So if you see the data coming out and it's 115, don't think to yourself, oh, no, they weren't taking profits, they were adding. You got to put it into proper context. Price was rallying at the time when they had to report the data. So it's very possible that the number could be higher. I suspect it'll be lower. Just from my experience and from looking at price action, I suspect that pound longs will be lower. Okay. So likely they're taking profits on those long positions, which is causing this move to the downside. Okay. All right. So that's the weekly chart. So on the daily chart, this is what we have. We had, let's just get my pen here. We had price come up here, shift momentum to the downside, come back up, contact supply, and is dropping again. So this is the profit taking on those long positions. Now, if we go to the 4-hour chart, remember, this was the supply up here on the daily chart. And we always talk about structures and price structures and so forth. So remember what I was telling you just the other day. We have this structure to the upside here. Oh, let me change that to green. We have an ascending structure here. So when the banks are taking profits on long positions, it tends to cause price to drop. So where's that momentum shifting? There's got to be a momentum that shifts to the downside. Well, we just had it. Here's the upside structure. It went from bullish to neutral. Why? Because it broke to the downside, breaking the ascending structure, and now we're starting to get pressure to the downside. Would I say momentum is aggressive to the downside? I would not. I would not. And here's the reason why. Because in this transition from being an ascending structure to a neutral structure, we are waiting for it to become a bearish structure. But remember, this is not a bearish structure within the context of the banks accumulating a short position. It's a bearish structure in the process of the banks offloading a long position. Two totally different things. Now, would I want to be getting short as the banks are taking profits on longs? There could be good opportunities for that. They might not be the highest odds because when they're taking profits, they can always rally price up to highs so they can take more profits on long positions. Accumulating shorts is the best time to get in short because they are focused on pushing price lower. Okay. So this is what we have. We have this neutral price action here. So why isn't it bearish? You might be asking yourself, why isn't it bearish? Well, because conventional technical analysis would say, hey, we have a high, we have a low, we have a lower high and a lower low. So wouldn't this be like a downtrend? Well, maybe your conventional textbooks would tell you that. But let me just draw something here. Trend line here. There you go. Would that be a good trend line for you? Would you like that? I mean, when I draw that trend line, there are red flags going off telling me it's not a trend line. I mean, sure, some traders would probably be drawing that trend line. I would not be drawing that trend line. Okay. So as far as I can see it, we're still in this phase. Okay. The neutral phase. So you have to be careful, because if you're looking at this bearish price action, you're thinking, wow, this is a great opportunity to go short the pound. Just remember context. Just keep in mind context. The fact that the banks are taking profits on long positions. Yes, we hit some supply that was contacted many times in the past. Yes, we have momentum shifting to the downside, but no downward trend. We're still in neutral territory. All these things should tell you a lot about the pound and what you should and should not do. Okay, folks, so hopefully that was helpful. Hopefully you'll get something out of that. Thank you for joining me again for another session. I hope you enjoyed it. If you did enjoy today's session, hit the like button. Let me know that you enjoyed it. And I'll make sure to do more of these sessions for you. Give you a little bit more insight on how we do the analysis here at White Oak FX. And if you want to join us and learn how we do this, we just started a new level 1 class. And it's a master class. And people are loving it. We just gave out a scholarship to a gentleman. We took in so many requests for the scholarship, and we reviewed all of them. It took a lot of time, but your efforts were not ignored, and we looked into every single one of them, and we took a look at what you guys had to say, and it was quite remarkable. And we chose a winner, and he is now doing the classes with us. So we just started the class. We did our first class, the foundation of successful trading. Okay, we go into a lot in depth about the very foundation of successful trading. What you need to think, how you have to think, what you need to know before you even start trading. And then skills of observation. Building your skills of observation. Some essential skills required in becoming successful. I think too many times when you look at education, they teach you the technical aspects and don't really focus on the bigger picture of trading. Because if you don't understand that there's a bigger picture, all the technical stuff is not going to really work for you. Anyways, so we just did 2 classes. Let's say you were to join today. You could spend this weekend going through the library, which would be great. You go through our video lesson library in level 1, and you get to review all those videos and learn the concepts and principles that are required to participate in level 1 classes. Okay. You can't do the homework without understanding these concepts and principles. And in the classes, I'm going to be applying these concepts and principles to the charts to show you how to extract the proper analysis from the charts. So yeah, you could spend this weekend reviewing these videos, getting ready. And then when you feel ready, you come and join our live class and enjoy yourself. Learn something fresh and new and substantial with trading. All right, that's it, guys. I hope you enjoyed it. Thanks again for your time. Enjoy your weekends. I'll be working on the Aruja report later today, and I'll be getting that information out to you. All right, take care. Have a good one. Hit the like. I appreciate it. Take care.